right, welcome back to the Tectonic Podcast, episode 315. Jenny, we're diving into something that's been rattling around the tech world like a loose screw in a GPU enclosure. NVIDIA, specifically, their almost unbelievable market dominance.
Unbelievable is right, Mark. When I saw the numbers for Q2 2025, my jaw went a little slack. We're talking 94% market share in discrete GPUs. 94%. AMD and Intel are basically playing in the sandbox while NVIDIA built the whole theme park. It's truly something else.
Oh, it's wild, Jen. John Petty Research, which is asterisk the time source for this stuff, put out these reports, and they show NVIDIA basically hoovering up all the market share. AMD's clinging on at 6%, and Intel. Well, Intel's so small on the chart it barely registers. It's like they brought a squirt gun to a laser battle, you know? They just don't have the ammunition.
And what makes it even more striking is that Q2 is typically a slow quarter for GPU sales, right? Like, usually things cool down a bit after the Q1 rush. But this past Q2, shipments grew by 27%. It defies the usual seasonal trends we expect to see in this sector.
Exactly. That's a 180-degree turn from the usual trend. And the consensus from the experts? It's all down to what they're calling pre-tariff panic buying. Think about it. The U.S. government was floating these tariff proposals, up to 25% on semiconductors from China. People heard that and thought, oh no, I need a new GPU now before prices explode. It created this artificial rush.
So people were racing to buy GPUs to get ahead of projected import duties. That's a compelling look into consumer behavior, fueled by policy uncertainty. And I read that AIBs, the add-in board partners, were selling out at suggested retail price, sometimes even above, within days. It was a seller's market, for sure.
Yeah, Tom's Hardware reported high-end cards saw 15 to 20% price spikes. And NVIDIA was perfectly positioned to capitalize on that. Their new RTX 50 series, which launched in Q1 2025, hit just before this tariff panic reached its peak. Meanwhile, Intel was dealing with driver issues for their Arc GPUs, and AMD was holding back on RDNA 4 until Q3. It was like everyone else was stuck in traffic, and NVIDIA zipped through the express lane, almost unobstructed.
It's almost too perfect for NVIDIA, isn't it? But here's the kicker, Mark. While everyone's focused on the gaming GPU market, NVIDIA's true secret sauce seems to be elsewhere. I'm talking AI and data centers, something that really differentiates them.
Oh man, this is the cool part. We keep talking about gaming GPUs, but if you look at NVIDIA's Q3 2025 earnings, 80% of their revenue came from data centers and AI. 80%. Their GPUs, whether it's an RTX 50 series for your gaming rig or an H100 in a server farm, share a common architecture. It's this underlying synergy.
So they're not just making graphics cards anymore. They're making universal AI engines. That's a powerful pivot, and it makes sense when you consider the CUDA ecosystem, which has become this massive differentiator for them.
Right? CUDA is this massive software moat. Like 95% of AI frameworks, think PyTorch, TensorFlow, they all optimize for NVIDIA first. So if you're an AI developer, you're pretty much locked in. This isn't just about raw performance anymore. It's about the entire developer ecosystem, the tools, the support. It's a deep integration.
That's a significant strategic advantage. It means the money they make from their data center and AI divisions can directly fund their gaming GPU R&Ds. So, while AMD and Intel are primarily competing in the gaming space, NVIDIA's got this robust high-margin revenue stream flowing from AI that their competitors simply don't have at that scale. It creates a very uneven playing field.
Exactly. John Petty himself put it pretty well. Gamers fund NVIDIA's AI dominance, but AI profits fund gaming innovation. It's this virtuous cycle. But here's the thing, Jenny. Despite this massive dominance and the Q2 surge, the long-term outlook isn't necessarily rosy for the overall GPU market.
No, it's not. The same John Petty research report projects a market contraction, a minus 2.9% compound annual growth rate for GPUs between 2025 and 2028. So the panic buying was a temporary blip, and we could see pullback as that demand dissipates. It highlights the volatile nature of this market.
Right. And Nelson Gonzalez, VP of Research at JPR, said the uncertainty over tariffs hasn't really abated and that it'll lead to a pullback. Plus, gamers leaving PC gaming, the rise of powerful integrated graphics, it all chips away. But I think for NVIDIA, the secret is that they're insulated because of their AI pivot. Their overall business isn't as tied to the whims of the gaming market, which is quite clever.
It's a smart strategy, no doubt. But let's look at the competitive landscape for a second. AMD is struggling at 6%. Intel's barely there. What are they doing wrong, or what are they doing differently that keeps them from capturing more of this market? They have capable hardware, but it's clearly not translating to market share.
Well, AMD, for all their technical prowess, they've lagged on product timing and ecosystem. Their ROCm platform is decent, but it's not CUDA. Developers aren't flocking to it in the same numbers. And Intel? Their Arc GPUs, which launched late last year, had driver issues, higher power draw. It simply wasn't compelling for gamers, and they don't have an AI ecosystem to fall back on like NVIDIA. It's a tough environment for them. They're really playing catch-up.
So if it's not really about raw hardware power as much as ecosystem, software, and strategic market placement, does this kind of market consolidation raise any concerns, like from an ethical or societal impact perspective? It seems like it could create some issues down the line.
It certainly does. NVIDIA's 94% market share and the CUDA lock-in definitely raise antitrust eyebrows. The EU's Digital Markets Act is already looking into NVIDIA's bundling practices, which they see as potentially anti-competitive. If they were forced to open-source parts of CUDA, that would be a significant shakeup for NVIDIA's entire strategy. It's a very real threat to their current model.
That makes sense. And the tariff situation also created an artificial boom-bust cycle, right? Like, prices spiked, low-income gamers couldn't get cards, and then the panic buying leads to a projected bust. That's not great for market stability or accessibility, especially for ordinary consumers.
And Mark, Tom's Hardware actually had a user comment that stuck with me. Someone wrote, "No wonder low-end NVIDIA ranks highest. It's like owning the cheapest Gucci bags. Status matters more than specs." It highlights how brand perception, especially for NVIDIA, can sometimes overshadow even technical parity. People are willing to pay a premium for that, green team, status, even if AMD has a competitive card. It's a powerful psychological pull.
That's a powerful insight. So for NVIDIA, the secret isn't just about making good hardware. It's about building an entire ecosystem, playing the market strategically, and leveraging their AI dominance to ensure their gaming cards remain top tier. But, like we said, those market contractions and regulatory clouds are definitely on the horizon.
Oh, for sure. NVIDIA is going to have to keep innovating, not just in hardware, but in their business model and their response to potential regulatory pressures. It's never a dull moment in the GPU world, that's for certain.
Never. This has been a compelling discussion, Mark. I appreciate you breaking all that down for us.
My pleasure, Jen. Always fun talking tech with you. To our listeners, we'd love to hear your thoughts. Do you think NVIDIA's dominance is sustainable? Or is it a house of cards waiting for a strong wind? Let us know on social media. We'll catch you next time on Tectonic.